Hey traders, 𝐭𝐞𝐥𝐜𝐸 or 𝘊𝑰𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Thursday, November 6, 2025. You're looking at a daily chart of the SPY or spiders, which is the proxy for the S&P 500. What do we have on the docket today? We had a nice decent down day today. We're down 1.07% or $7.27. And we finally managed to reach home base, the 20-period moving average. And we sliced on through a little. We went and filled that gap we were talking about yesterday at 671.76. We were talking about how that's an important area for the market. It's a gap that needed to be filled. It coincided with the 20-period moving average. It was near the vicinity of this recent breakout area and a breakdown candle. The high of the breakdown candle. This was a support area that we had on the board, and we could go into that when we go over inside the numbers, which we'll do that momentarily. But I just wanted to go to a smaller time frame. We could even go to a 15-minute time frame and take a look at what happened at this area. So we'll just quickly pop over to inside the numbers. This is the morning game plan. We'll scroll down a little and we can see that we had a number at 672 and then another one at 670.55. So those two numbers are on the board. As you can see, we did come up a little bit short of that first number at 672, made a low of 672.52, around 50 cents short. So that can constitute as a first time, best time situation. Coming up short of the number the first time around, it takes the luster off the trade. Okay, more likely than not, the second time around, we get to that number, they might want to try to spike through it a little, or at least get down to the next number in the sequence. So as you can see, we did spike that number. We did get down to the next number in the sequence that was at 670.55, did provide a little bit of a bounce, but let's go over to a 5-minute time frame and we can see that we started to utilize that 672, that was an important number, as overhead resistance. Never got back above that number, always closed candles below. And my reason for telling you this, and we were talking about it in the live room today, is that even though sometimes we blow by those important numbers, they will still be important later on, such as utilizing that number as overhead resistance on the way back up, which is exactly what happened in the market today. It even happened at that 670.55 number. Started to use it as overhead resistance on the way back up. A little bit right here as well, and then we pretty much closed right on that back end number. So we pretty much closed right at that area today, slightly below the 20-period moving average, just getting a different taste, looking at different time frames. Sometimes I like to look at the 2-day, 3-day, even 4-day charts. Clear up these lines real quick, and we can see that we pretty much stopped right at this breakup candle low. It wasn't the exact low, but it's around 20% in the vicinity of this breakup candle low. That happened to coincide right with the 20-period moving average. All right, looking at it in hindsight, it doesn't really matter anymore. Can't really do anything with this information, but I do have another number in that vicinity that's going to pose as an important destination towards the downside. I'm actually going to throw two numbers at you guys, so I would definitely get your sticky notes out and write this down. First number comes in at 667.43, and the next one at 665.66, right in front of that 50-period moving average. It's an important place for the market. It's near the vicinity of a big fat semi-round number, and it's a support area at least from an intraday perspective. So we are below the 20-period moving average. That is home base. It's not something to make a federal case out of. That's normal garden variety behavior, especially when we were extended from home base last week. It's only natural for the market to come back to where it's comfortable at, the 20-period moving average. Looking at it in a weekly chart perspective, there's nothing wrong with the chart. We're still extended from home base, coming down to this recent breakup candle low. Those numbers are in the vicinity of that breakup candle low. They're mathematical numbers that I worked out. And by the way, yesterday we had that supermoon, the beaver moon, that is a tinfoil hat event, and we said that not every time, but many times, the market will like to take a little turn after those events. Is this the turn that we've been looking for from that tinfoil hat event? It could be, or at least it could be the start to something bigger. Last week we had a little pseudo doji candle situation. This is a sign and or signal of a trend change. We didn't have the accompanying volume that we normally would like to see for those candlestick types, but regardless of the situation, that is a doji candle and a sign signal of a trend change. One more thing before we move on, and you should probably write this number down on a sticky note. If you remember correctly, this was one of our longer term pivot numbers that might be coming back into play. And that number comes in at 660. 1 penny off, let's just adjust that. Make this green to represent the longer term pivot number. We're not quite there yet. About $11, $12 away from it right now, but it'll be interesting to see if we can come back into that longer term pivot number. Remember, we use the pivots as inflection points to see where the market wants to head to determine the strength of whether it's in a bullish or bearish position. And with these longer term pivot numbers, these numbers derive from these larger time frame charts, and we say this almost every single day, the larger the time frame is, the more dominant it is. The daily chart will hold more importance compared to a 30, 15, 10-minute chart. It's the bigger picture of what's going on. So we got 660 as our longer term pivot number. Don't have to worry about it just yet, but it's definitely something to keep in our back pockets. You're in good hands, especially when the lazy swing trader is picking up profit target alerts for Allstate. We had the entry alert at 193.13, and we locked in our first profit target at 202. What was the high right here? The high is exactly 202.74, and then ripped it right back down. Don't you think that was a good profit target area? How does the lazy swing trader know? Locked in a 4.59% gain. It's now a risk-free, emotionless trade, and we're holding trailers for the never know. How do you like dem apples in the lazy swing trader? We're already off to a great start in November. 3 wins already to start the month, only 1 loss, and that loss was only 1.74%. That's what happens when we always have a reasonable stop loss, which we have for every single one of these trades. And already this month, 3.99%, 2.89 base hit, 4.59%. These are trades that have locked in their first profit target, hence the risk-free emotionless trade, and they're still going on. All right, we had a 100% win rate last month and in October, and only 2 losses in September. Take a look at this. SJM right here. This was the start of August. All of these trades, only 3 losses. That is absolutely bonkers. This is the perfect time to get into the lazy swing trader. Or we got a whole bunch of new high probability swing trades lined up for members ready to go. How you doing in the lazy swing trader? If you made any money taking these swing trades in the past few days, leave a comment down below and let others know how you doing. And if you're making money, did we have any morning trades in Inside the Numbers and the live room? But I'll tell you this, we had trades that worked right off the bat, and then we had trades where she just blew right through. Which is why today especially, we had to make the correct and right business decisions, because this is a business, we treat it as a business. Always gotta make sure we're not doing stupid stuff, and I'll show you guys what I mean all in just a second. But let's start with our first morning trade of the day at 675.95 to 675. We can call this the first main support zone on the board. Right at the vertical line is today's activity. We got the 2 support numbers on the board. And as you can see, we went right into that front end number at 675.95 and bounced right back in the other direction. Made a high of around 677.01. That's a nice little double on the trade. We book a base hit anywhere between 50 to 70 SPY cents or 5 to 7 ES points. That's the base hit. And base hits put you in the Hall of Fame. And then we hold the trailer for the never know. Sometimes you get a nice runner, and sometimes they go back down and stop you out. That's the way we treat it as a business. We lock in the risk-free emotionless trade so that we don't have our minds doing any stupid stuff. Okay, it's not a risk-free emotionless trade from start to end, especially at the start of the trade. There's really no such thing as a risk-free emotionless trade right off the bat, but we have the ability to form it into one. That's why we book a base hit. And as my dad always said, base hits put you in the Hall of Fame. After the base hit, put the stop to break even so that we could eliminate all of our emotions and risk. Hence the name risk-free emotionless trade. These are scalp with potential areas, support areas. So let's see what else we got. So then we went right back down to support number 2, the back end number of the support zone. This was an important number. It's a big fat semi-round number at 675. As you can see, we stopped on it for a little while. Little bounce wasn't nearly enough to provide you a base hit. And then we started to close candles below, spend some time below, and then went to the next number down in the sequence. By the way, look how we utilized that number as overhead resistance on the way back up. That's exactly what I was talking about when I said that even though we blow by these numbers sometimes, they could be utilized as overhead resistance on the way back up, which is exactly what happened. What else do we got? Look at this, at 9:43, came into the front end number, 675.95. First order of business in a support or resistance zone or number is that they stop going in the direction they were previously going. And then at 9:45, there's your base hit. Holding the trailer is fine, just don't let the remaining portion go bad on you. What were some other numbers down below? Well, we had 673.95, that was a potential spike to low and rip it right back up trade. And then we had the 672 and 670.55 number that we previously mentioned. Let's go take a look at what happened. So we got those numbers on the board. We could remove these 2 numbers, we don't need them anymore. So as you can see, we did blow by that spike the low and rip it right back up number at 673.95, but notice how we did utilize it as overhead resistance on the way back up. Those numbers are still important despite the fact blowing through it. I say this almost every single time, and those moments can provide more trading opportunities. We mentioned this in the live room, that we were getting some heavy selling pressure throughout the morning session, so those long trades were a little bit more risky. But another thing that you have to keep in mind is, are you willing to risk a majority of your profits that you just made from that morning trade on the next one? And there's kind of two sides to this. The market doesn't know about your next trade. We talk about that from time to time, especially in the live room. She doesn't know about that loss that you previously just had. Each trade is different in the sense of that it's a new trade, and the market doesn't know about your old trade that you just took, whether it's a win or a loss. But then the other side to it is about who you are as a trader. Okay, for me, especially when I booked a nice profit in the morning trade that we just had, I'm not willing to give that up so easily. Sometimes I don't make another trade throughout the whole day. I'd rather take my profit and go. No one ever went broke taking a profit. Or sometimes I'll size down, maybe play around with the micros, risking only a portion of the profits that I just made, not risking all of it or even more. And it really depends on who you are as a trader, what your risk tolerance is. Are you comfortable getting into a new position? Those are all things that you have to decide for yourself and who you are as a trader. We already talked about that 672 and the 670.55 number. We did come up short right here, so that does constitute as a first time, best time situation. So the next time around could have looked for a little spike of the number, or wait for the back end number, which was some support. Literally nailed it right here and again right here. But again, that's when you have to decide, are you willing to take that trade? Are you happy with your profits? Is it too close to lunchtime? Remember, we try to eliminate as much variable risk as possible, giving us the highest percentage of having a winning trade. So we had some wins today, we had some losses today, we had a mixed trading day today, but if you treat it as a business and follow the process, follow the game plan, managing your risk, then the system will always prevail and the money will follow. You could pause the video, read the notes, and go back to the chart to double check the work. There's a lot of intraday updates in here. We got the morning game plan, the afternoon write-up. We got stocks on the move. Today we had 4, only one of them hit their entry targets. Entry number 1 was a jump target. We opened right on entry number 2. We were talking about this live in the live room. We weren't necessarily too interested in this trade. And then not to mention, we have a list of 13 different markets with support and resistance numbers. We have everything that you need to be a successful and profitable trader. Let's go take a quick trip around the world and take a look at Camp IWM, my number 1 favorite market leading indicator. We had a 1.77% down day today, and we're closing below that important number of 244.30. All right, we opened pretty much right on that number. We made a high of 244.79 and then ripped it right back down, cutting through the 50 period moving average, this recent breakup candle low. So we're now below 2 out of the 4 moving averages, the 50 and the 100. We managed to stop pretty much right at this breakup candle low, right here. Those areas are important and magnetic for the market. So now what's the next destination down below? Well, we're going to have those numbers ready for Inside the Numbers and live room members, but I'll tell you this, Camp IWM is going to want to start to work on this low right here at 237.56 from this big time breakdown candle. All right, that was an important area for the market. You can see it was important, obviously, right here, again, right here in that area, actually in all of this area. So that certainly is an important place for the market, and it happens to be the midpoint right between the 50 and the 100 period moving average. Again, we're going to have those intraday numbers ready for Inside the Numbers and live room members. On the other hand, let's go take a look at my second favorite market leading indicator, the transportation department. And one of the possibilities that we said last night is that we can start to use this downwards trend line as support on the way back down, now that yesterday we closed above it. And that's exactly what happened. Today, as you could see, we spiked the trend line by just a touch, and then we ripped it right back up, still closing candles above it. As long as we stay above and close candles above, that's the bull case scenario, and we're in a pretty decent spot for the transportation department. Next area that she's going to want to work on is this zone that we have at 16,331 to a big fat round number at 16,500, give or take. I'm expecting that to be a place where the market shouldn't just waltz right through. But again, that's only if we can continue to close candles above that trend line and utilize it as support. If we break the trend line and close candles below it, you already know what the next destination is going to be on the downside. That's going to be the pivot number, where all the moving averages besides the 200 are currently stationed at. The 50, 20, and 100 are all near the vicinity of the pivot, and that's still an important place for the transportation department. What do we got going on in the financials? XLF. We're down 0.36%, funny how that works, and we're pretty much just eating time off the clock, near or around the 20 and the 100 period moving average. Today we tested the 20, almost made it to the 100. That's some normal garden variety behavior, but what's important to note, and the most important thing that we can gather from the day itself, is where we close. It's not about how you open them, it's not about how you trade them during the day, although that stuff is important to an extent. The main thing that we have to understand and recognize each and every single day is where the market is closing at. That's the most important puzzle piece information that we could gather. So we're closing below the 20 and the 100. I don't know where that line came from. Let's just remove that and put a new one, because the next destination on the downside is going to be this recent breakup candle low at 51.84, around that area. And then obviously we have this downwards trend line that's overhead resistance. And until we could get above that trend line and close candles above it, and then maybe even start to use it as support on the way back down, no dice for the upside. We have to recapture that trend line to be in a more bullish situation and then reestablish price above all the moving averages. Right now, we're below 3 out of the 4 moving averages on the daily chart. Quick look at the weekly chart, we're only down below the 20. Okay, so as of right now, the financials are okay, taking it at face value. Nothing wrong with the financials, therefore there's nothing wrong with the overall structure of the market. What about the Q people? We're down 1.86%. We said yesterday that we came up a little bit short of this gap right here at 617.10. The low yesterday was 617.21. That is a first time, best time situation. So we said last night we're most likely to fill that unfinished business. We were too close to that gap to not finish it. But the main question was, are we just going to spike right on through, make it down to the 20 period moving average, which we did, but we cut through it like butter, and we made our way all the way down to the next gap, the next number in the sequence. And that was at 610.58. Today we made a low of 610.30. There's a reason why we found support at that area, because it's important. It's a magnetic spot for the market. So as of right now, we're closing below the 20 period moving average. We can get some more testing of it tomorrow, maybe even on Monday. That is normal garden variety behavior, but it will be interesting to see how the market treats this area. If we just go right back up and find support off of it, closing above the 20 period moving average, reestablishing price above all the moving averages, or do we have some more follow through towards the downside, possibly even reaching the 50 period moving average? The next big time destination for the Q people is going to be this breakup candle low that's right in front of the 50 period moving average. That is the next destination towards the downside. But if we do manage to find support in this area right here, she's going to want to climb the recent breakdown candle that was formed today. The high of that breakdown candle is going to be some bona fide overhead resistance, at least from an intraday perspective. Last but not least, we got SMH shaking my head, the semiconductors. Smash mouth. We're down 3.34%. Nice little down day today for the semiconductors. We finally made it to this number we were talking about. That's this low right here at 349.82. That can be considered the entrance to no man's land. Not a huge entrance, but there is some space in between that low and this gap right here. Not to mention, that number did coincide with a recent breakout area, and we did find support at that number, and it was on the 20 period moving average. So we are closing candles above it. Doesn't mean tomorrow the same thing applies. Anything can change with the snap of the fingers. We'll see if we get a little bit more follow through towards the downside. Maybe go ahead and fill this gap down below, just like the spiders did today. That number comes in at 344.80. I do have another number that you should certainly write down on a sticky note. That number comes in at 337.63, and those are some numbers towards the downside. That should be an area of support, at least from an intraday perspective. If we do manage to stay above the 20 period moving average, keep closing above this low right here at 349.82, then we're going to want to work on that breakdown candle, today's breakdown candle, and try to climb up towards its highs. If we do, and eventually start closing candles above, then we got some unfinished business right around 366.10. Came up a little bit short yesterday. That does constitute it as some unfinished business. The market doesn't like to leave unfinished business. They like to make it finished business. and that is a technical term. That's gonna wrap it up for today's video. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're pulling the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐼𝐞𝐴. Please don't forget to like, comment, subscribe on the video, as it helps me and the channel out a lot. We'll be back ready to go in uniform for Finish Strong Friday. I hope each and every single one of you has a great rest of your day. Stay safe and take care now, folks.